Hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin. I am a professional trader and a programmer as well. If you guys are new, what I'm doing here, I'm looking at some good opportunities that may happen next days, as well as I explain some aspects of technical analysis and psychology of trading. And if you guys are following me for a while, I want to say thank you. Thank you for your support, for your thumbs ups. Thank you that you share my videos on social media, that you allow other people, other struggling traders know more about my channel and about my style of trading. Okay, so back to our topic of today's discussion. I will talk about the Gartley advance formation, especially the Euro-Dollar 15-minute, and not all the Gartleys. I will talk about the large Gartleys, those Gartleys that have large swing identification algorithms. I will open your eyes if I say that every pair is different. Some pairs are better traded with bats, some other pairs are better traded with ciphers, and also they are sensitive to the size of the pattern. Some pairs are better traded with small bets, other pairs are better traded with larger bets, and so on and so forth. So I have created a special software where you can switch between those swing identification algorithms, either large, medium or small. So you won't find it anywhere. This is my innovation technique to allow a user to switch between the swing identification algorithm and to fine-tune the strategy exactly to the pair personality. Okay, let's go and start from Gartley advance formation, large swing identification algorithm, Euro-Dollar 15 minutes. Let's refresh some knowledge about how Gartleys are traded. And the Learn the Patterns tab, you should go in the bottom and find the Gartley advance formation, click on this picture, and you will be routed to this Gartley advance formation section. Okay, I hope you know those rules of identification, general rules. They are only 1/3 of your success. The two other thirds are trade execution and trade management. Unfortunately, many traders stop their journey on this first. They think, oh, it is too complicated to remember all those ratios in every situation, so I can never remember them. So that's why I will move to another strategy, and this is a very very bad mistake. I feel pity for them. Okay, some other traders go to the trade execution and they do it not exactly correct. They do it with limit orders and they forget about the warning signs, and the warning signs is our today's topic. Because they are rushing into a trade, they think that the more trades they take, the better results they have, the more pips they generate, but that's not actually true. If the rule says avoid expansion bars, then you should avoid expansion bars. And if you are disciplined to follow that rule, you will be rewarded. Okay, let's go to the charts and draw some patterns. I will use Monster Pattern Search. I will use the preset for Gartleys. Okay, choose advanced and choose price. Okay, done. So in few seconds those Gartleys will appear on my chart. Okay, let me zoom it in and let's go. Some Gartleys appeared. Well, as I'm talking about large expansion bars today, so we should first set some rules. What are those large expansion bars? My rules are very strict. They say that the large expansion bar is a candle that has a body that is twice larger than the ATR 55 period. So I have coded a special indicator that it shows me the bodies. Those histograms are bodies, and those bodies that are twice larger than the ATR period 55, they are colored red. So it is visual representation of whatever one is able to do manually. You can calculate the body, yes, like this, and you can attach the indicator of ATR. Where are they? I don't know where is that ATR indicator. Somewhere. It is absolutely free. Here it is, the ATR indicator, and you can compare what is the difference between the ATR and the body of the candle. It is very simple. I just love it doing mechanically and fast. I don't want to waste my time on those useless calculations. I'd better do it once in my code, the calculations, and then all those calculations will be done automatically by the program, like this. Okay, so the rule says avoid those patterns that have large extreme expansion bars within the CD lag. So here we don't have any. This is the C point, this is the D point. Actually it is here, yes, but it wasn't triggered. Let's go somewhere else. We don't have any here. Okay, let's do it this way. I have created an Excel spreadsheet. Here it is on Eurodollar 15 minute for the purposes of example. I was using my trading time. It is 6 a.m. till 3 p.m. I trade only this time. I don't trade outside of that window. Okay, so, and I have calculated all those Gartleys that were drawn by pattern search software, like this. The swing identification algorithm is large. Okay, starting from 2012, it is 5 years ago. So if we type it here, 2012 January 12th, go to my MetaTrader, 2012 January 12th, we can see that Gartley, here it is. So it triggered on that candle, and this candle is 9:45. So if we go and see the time, 9:45 is the time, and it ended at 10 hitting the first target. Okay, so those patterns that have large body or large extreme expansion bars, warning signs, yes, they are marked large body, so we can also find them as well. 2012 second, let me type that, 2012. Okay, so we have them. Here is the pattern with the large body, the C to D leg, large body. Just skip that pattern, that's it. Okay, another pattern example with large body, 2012 720. Let's go there, 2012 7 and 20. Yes, here is the pattern. You can see that we can stretch the Fibonacci's. This is the terminal price bar that triggered the pattern, and before that we had that large candle within the C to D leg. Here's the situation. Let me explain it a bit in details. You see that large expansion bars, yes, but by the time this bar terminates, by the time it closes, you have the order triggered. What you should do, you should use a graceful exit technique. This means that when price comes back to your break-even, you just exit with 0 and you don't wait for your full stop loss to be hit. This is called the graceful exit technique. So in this situation you can avoid as if nothing had happened. You can even generate 2-3 pips on this pattern. So if you have the large expansion bars in advance, then of course you just don't enter. Okay, not always large expansion bars appear with losses. They also appear with some winners. Let's go to this example, 2012 726. 2012 7, and it should be 26. Here is the date. Here it is, the example. A wonderful touch and go situation. You can see that. Although we had a warning sign that has that told us stay away or look for some confirmation, maybe, yes, it was a perfectly working Gartley advanced formation. Okay, let's calculate how many those large bodies we have. So total we have 25. Okay, let's do some filtering. Let's go to result, maybe this one. Let's go to filter. We had 25 total, and let us choose only negatives. Okay, so these are negatives. Let's calculate the negative number. Number of negatives are 17. Okay, this means out of 25 filtered pattern, 17 were winners, and 25 negative 17. Well, let's do some math. 25 total, 17. So we filtered 8 winners. 8 winners, 17 losers. If you divide that, 25 divided by 8. So this means that out of every 4 trades filtered, 3 were losers and 1 was a winner. So you filter 3 losers and 1 winner. Let me disable that. Okay. So here I calculated everything. So the total statistics looks not good. Take profit accuracy, take profit 1 accuracy is 46% only. Take profit 2 accuracy is 25% only. Risk to reward is almost the same, 1 to 1, and take profit 2 is on average 1.9, 2. It is the same. It doesn't matter the risk to reward on this and that. What is important is that take profit 1 and take profit 2 accuracy. Okay, so I did some math, some calculations. Well, you should keep in mind that these numbers, the 46, is that for 5-digit broker, it means 4 pips and 6 decimals. So, and they are turned into average pips here when I did the calculations. So they were just divided by 10. You can see it in my formula. Okay. Oh, what I did, I should divide by 10. Let me do it this way. Okay, everything is fixed. What I'm going to do now, I'm going to show you the expectancy of those godlies. If you trade all those godlies, regardless of that large expansion bars, you will be negative. Negative 74 pips, negative 52 pips if you trade the first target only, if you trade the second target only, or if you trade both of them, so you will be negative 126. For 5 years trading that my window that I trade. So this is the visual representation of the chart, how they go sideways to negative, the same negative to sideways, and both targets the same negative to sideways. Okay, now I will show you visually so you can perceive it and remember it, how it is important to be disciplined. And if it is said to avoid the large expansion bars, then you should avoid them. You should be disciplined with this rule. You shouldn't be hurried to trade every single opportunity. Okay, let me do it this way. Go to filter that. Yes, let me choose only large expansion bars. I even had some gap here. It was a gap and large body, and we have large body. Okay, what I'm going to do, I want to delete them all, as if I never traded them, as if I never took them, as if I just skipped them, being disciplined. That's it. We don't have them. Okay. Okay. So it requires recalculations like this, filling the things. Okay, if you look back here, now you see it turns into positive. You see? First of all, the accuracy for now is 52. The take profit 2 accuracy is 31. You see? And let's look at some charts. You see it is moving to the upside. And the same with target 2, moving to the upside. And both targets generating for you 133. Instead of losing 121, you generate 133. Okay, so these are the examples of how you can be disciplined, how you should obey the rules. If it is said that you should avoid expansion bars, then you should avoid. But you can improve your trading some other different ways, of course. You can do the backtesting for every pair, and you say, oh, okay, if large galleries aren't that very much good on euro dollar 15 minute, I wouldn't trade them at all. I would only trade bats and ciphers. Of course, you can do that with my indicators. Just switch whatever patterns you wish, just switch to true and disable any other patterns that show negative expectancy on this particular pair and that particular time frame. Yes, you can do it easily. Well, that's it. Hope you remembered that. Hope you will stay disciplined, and good luck.